Hey everyone, welcome back to Corporate Decoder, where we dig into messy financial reports and try to make sense of them. Today we're unwrapping Armour Residential REIT's August 2025 update. Think of it as a quick check-in for a real estate investment company. So Armour Residential REIT, or Armour as they call themselves, is a company that owns and manages a bunch of properties. They make money by renting these out and by investing in real estate related things. Today's filing is basically a snapshot of what they've been up to, a current report. The key date here is August 15, 2025. This report is telling us what's happening as of that moment. It's like getting a postcard from the company saying, here's what's going on with us. Now, this part tells us what kind of company Armour is, how it trades on the stock market. They have preferred stock, which is like a special kind of stock with a fixed dividend, and common stock, which is what most people think of. Both of these are traded on the New York Stock Exchange, the big board. Their Series C preferred stock pays a steady 7% dividend. That's pretty good for preferred stock. It means they owe that money back to those investors regularly. Their common stock is what gives them ownership in the company and usually gives voting rights. The 001 par value is just a tiny face value. The real value is what the market decides. The main point of this report seems to be item 701, which is about Regulation FD disclosure. This is a rule that says companies have to share important information with everyone at the same time. They can't give a heads up to one group of investors and not others. So on August 15, 2025, Armour put out a presentation. This presentation is like their self-made news release, giving updates on their money situation, how their business is running, and what they're doing. This presentation is attached as Exhibit 99.1. It's the actual document with the updates. Think of it as the main event of this whole filing. Normally these presentations give us a peek into their strategy, any recent deals, or how they're performing against their goals. Then we have item 9.01, which is all about the exhibits. This just lists the documents that come with the report. We saw the presentation dated August 15, 2025. That's our main source of information. And there's also Exhibit 1.4, which is the cover page interactive data file. This is a digital format that makes it easier for computers to read all the information in the filing. It's like a structured report card for the company. Finally, the report is signed off by Gordon M. Harper, the Chief Financial Officer. This means the numbers and information have been reviewed and approved by the person in charge of the company's finances. Now, while this filing is pretty light on specific financial numbers today, it's primarily a notification that Armour has released an investor presentation. The real meat of their financial performance would be in that presentation itself, which we don't have the text of here. However, we can infer what they're trying to communicate based on the structure of this report. They're signaling that there are updates to their financial position, business, and operations, and they're making those updates available to everyone simultaneously. This is standard practice and a good sign that they're being transparent. Looking at the types of securities they have listed, preferred stock and common stock Armour is operating in the real estate investment trust sector. REITs are known for paying out most of their taxable income as dividends, making them attractive to income-seeking investors. The 7% fixed dividend on their Series C preferred stock is a significant commitment. It means that regardless of how well the company performs in a given quarter, they have to make sure that dividend payment is covered. This can be a steady source of income for investors, but it also means less flexibility for the company if revenues dip. The common stock, on the other hand, fluctuates more with the market and the company's overall performance. If Armour is doing well, acquiring profitable properties, or successfully managing its existing portfolio, the value of the common stock should ideally increase. Without the content of the presentation, it's tricky to dive deep into specific financial metrics like revenue growth, profit margins, or debt levels. However, the fact that they are issuing an update suggests they want to keep investors informed about recent developments. This could relate to changes in their property portfolio, interest rate impacts on their financing, or any new strategic initiatives. Companies like Armour, which invest in real estate, often deal with leverage, meaning they borrow money to buy properties. This amplifies both gains and losses. If interest rates rise, their borrowing costs go up, which can squeeze their profits. Conversely, if property values increase and rents go up, they can see substantial returns on their investment. Given this August 2025 filing is a current report Form 8K, it's usually for significant unexpected events, or as in this case, for the disclosure of information that the company is required or chooses to communicate to the public. The mention of Regulation FD is key. It means this presentation is the company's way of making sure all their stakeholders, big and small, get the same information at the same time. So what's the takeaway here without seeing the presentation? Armour Residential REIT is active and communicating. They've got a mix of preferred and common stock driving their operations on the New York Stock Exchange. The CFO has signed off on this, giving it an official stamp. The main event is the investor presentation, which likely details their financial health, business activities, and any strategic moves. This is a standard regulatory step, emphasizing transparency. Now, my take on this. As a decoder, I see this filing as a signal. It's not a quarterly earnings report packed with numbers, but it's a deliberate disclosure of an update. This strategy of releasing a presentation implies they have something significant to share, perhaps positive developments in their portfolio, or maybe they're addressing market concerns. For investors, the next step would be to find and scrutinize that presentation. Look for details on their portfolio composition, how they're managing their debt in the current interest rate environment, and their outlook for property values and rental income. The 7% dividend on preferred stock is a strong anchor, but the common stock's performance will reflect the overall success of their real estate investments. Keep an eye on how they are leveraging their assets and managing risk. Alright, that's a quick look at Armour Residential REIT's August 2025 filing. What are your thoughts on what this company might be announcing in their presentation? Let us know in the comments below. If you found this breakdown helpful, please smash that like button and subscribe for more insights from the world of corporate finance. And don't forget to join our Discord community. The link is in the description. Thanks for watching, and we'll see you in the next decoding.